For most people, their home represents their largest investment and greatest asset. Protecting it is not optional, it is essential. However, the escalating cost of home insurance in the United States has become a growing concern for many homeowners. While occasional small price increases are expected, the trend in recent years has been alarming. Between 2021 and 2023, home insurance premiums in the U.S. increased by nearly 20%. And in 2024, homeowners faced an average rate hike of 17.4% for new policies. Those who bought policies in 2021 saw an average renewal cost increase of 69% by 2024. These figures underscore how rapidly the situation is spiraling. The devastation caused by natural disasters, such as the 2025 wildfires in California, has only compounded the problem. The economic losses and damages from these fires are estimated to range between $135 billion and $150 billion. The ripple effects of such events extend far beyond those who lose their homes. They strain the entire insurance market, triggering widespread premium hikes and even causing some insurers to withdraw from high-risk regions altogether. The rising cost of home insurance in the U.S. can be attributed to several interrelated factors. Increased natural disasters. Climate change has led to more frequent and severe natural disasters, including hurricanes, wildfires, and floods. In the first half of 2024 alone, natural disasters resulted in over $60 billion in insured losses, 54% higher than the 10-year average. Events like Hurricane Helene and the Pacific Palisades wildfires of January 2025 have caused unprecedented destruction, driving insurers to increase premiums to cover escalating risks. Rising rebuilding costs. Inflation has significantly increased the cost of materials and labor required to rebuild homes after disasters. Insurers are passing these costs onto policyholders, further driving up premiums. Litigation. The litigious nature of U.S. society has also contributed to rising insurance costs. Aggressive legal claims force insurers to allocate more resources to settlements, leading to higher premiums. Reinsurance costs. Insurers often rely on reinsurance to protect against catastrophic losses. However, as disasters become more frequent and severe, reinsurance costs have surged, and these increases are being passed on to homeowners. In states like California, where wildfires are a growing concern, some homeowners' insurance premiums have doubled or tripled. Worse, many insurers are refusing to renew policies or withdrawing from these markets entirely. As a result, homeowners are being forced onto state-backed plans like California's FAIR plan, which often provides limited coverage at higher costs. Given the escalating challenges of homeownership in the U.S., diversifying your real estate holdings by investing in property abroad can be a smart financial strategy. Here are the benefits. Lower insurance costs. Many countries offer significantly lower insurance premiums compared to the U.S. For example, in Portugal, average annual home insurance premiums are around €70. In Colombia, premiums range between $200 and $500 annually. In contrast, some U.S. states, such as California or Florida, can see premiums exceeding $5,500 per year. Stable climate and reduced risks. Investing in countries with fewer natural disasters, such as Portugal or Estonia, reduces the likelihood of property damage and the need for exorbitant insurance. Diversification and wealth protection. Owning property abroad protects your wealth from domestic economic and political instability. It also allows you to diversify your assets, reducing dependence on a single market. Opportunities for citizenship. Many countries offer residence or citizenship programs tied to real estate investments. These programs not only provide financial benefits, but also grant access to global mobility and improved quality of life. A second citizenship offers more than just a backup plan for your property investments. It provides access to better lifestyle opportunities, tax benefits, and increased security. Here are some of the most attractive programs. Southern Europe. Southern Europe offers beautiful destinations with relatively low insurance costs. Portugal, annual premiums between $80 and $400. Greece, annual premiums between $150 and $400. Spain, annual premiums between $200 and $600. Citizenship options. Portugal's Golden Visa program, while no longer tied to real estate, allows investments in government bonds or businesses. Greece's Golden Visa remains real estate focused, with a minimum investment of €250,000. Latin America. Latin America combines affordability with lifestyle benefits. Panama. Annual premiums between $300 and $800. Mexico. Annual premiums between $250 and $600. Citizenship options. Panama's Friendly Nations Visa and Mexico's straightforward residency to citizenship pathway make these countries attractive choices for expats seeking a second home. The Caribbean. The Caribbean offers idyllic surroundings and favorable tax regimes. Grenada. Annual premiums between $400 and $1,000. St. Kitts and Nevis. Annual premiums between $500 and $1,200. Citizenship options. Grenada's and St. Kitts and Nevis's citizenship by investment programs provide fast and straightforward routes to second passports, along with the added benefit of visa-free travel to numerous countries. With U.S. insurance costs climbing and natural disasters becoming more frequent, diversifying your assets and securing a second citizenship is a proactive approach to safeguarding your wealth. Whether through lower insurance costs, tax advantages, or access to global opportunities, investing in real estate abroad offers significant financial and lifestyle benefits. As the challenges facing U.S. homeowners continue to mount, now is the time to explore your options. A second citizenship is not just a safety net. It's a pathway to a more secure and prosperous future.